Navigating Market Currents. A deep dive into the SPDR DoubleLine Total Return Tactical ETF, TOTL. In the ever-evolving landscape of financial instruments, exchange-traded funds, ETFs, have carved a niche for themselves as accessible and versatile investment vehicles. Among these, actively managed bond ETFs offer a unique proposition, promising the diversification and liquidity of ETFs coupled with the strategic expertise of fund managers. One such ETF that has garnered significant attention is the SPDR DoubleLine Total Return Tactical ETF, TOTL. Launched in 2015 by the renowned fixed-income investor Jeffrey Gundlach, TOTL has carved its own path in the bond market, employing a dynamic approach that aims to weather various market conditions and deliver consistent returns. This article delves deep into the intricacies of TOTL, unveiling its investment strategy, portfolio composition, historical performance, and potential risks and rewards. By shedding light on its key features, we aim to equip investors with the requisite knowledge to make informed decisions about incorporating TOTL into their portfolios. Unveiling the engine of performance, TOTL's investment strategy. At the heart of TOTL lies an actively managed approach that departs from the passive index tracking methodology ingrained in most ETFs. The key differentiator lies in Gundlach's tactical allocation strategy, which dynamically adjusts the fund's portfolio based on his macroeconomic forecasts and market analysis. This flexibility allows TOTL to actively seek opportunities across the broad spectrum of the fixed-income universe, including U.S. Treasuries, agency debt, corporate bonds, securitized products, and even international exposure. Gundlach's playbook centers around several pillars. 1. Top-down macro analysis. TOTL delves into economic trends, interest rate projections, and geopolitical developments to anticipate potential market shifts and adjust the portfolio accordingly. 2. Diversification across fixed income sectors. The fund avoids over-reliance on any single asset class, mitigating sector-specific risks by spreading investments across government bonds, corporate bonds, and other fixed income instruments. 3. Active duration management. TOTL strategically adjusts its interest rate sensitivity, duration, based on Gundlach's outlook on the yield curve. This means strategically increasing or decreasing the average maturity of the portfolio holdings to capitalize on anticipated changes in interest rates. For opportunistic tactical bets, the fund doesn't shy away from deviating from traditional fixed income allocations. Gundlach has employed strategies like utilizing options to hedge risks, investing in non-traditional fixed income assets like convertible bonds, and even shorting certain securities when he perceives value. This dynamic approach stands in stark contrast to passively managed bond ETFs that simply mirror the composition of a fixed index, irrespective of prevailing market conditions. TOTL's active management aims to exploit market inefficiencies and generate excess returns beyond what a passive index tracking strategy might offer. Demystifying the portfolio, what's inside TOTL? To understand TOTL's performance potential, it's crucial to analyze its holdings. As of November 2023, the fund's portfolio primarily comprises U.S. government and agency debt, approximately 60%, with significant allocations to investment-grade corporate bonds, around 25%. Smaller, strategic positions are allocated to high-yield bonds, emerging market debt, and convertible securities. Interestingly, The fund also utilizes cash-like instruments and derivatives to manage its net exposure and generate returns. It is important to note that the composition of TOTL's portfolio is fluid and constantly evolving based on Gundlach's assessment of the market environment. This dynamism contributes to the fund's unique character and distinguishes it from passively managed bond ETFs with static allocations. Charting the course. A look at TOTL's historical performance. While past performance is not indicative of future results, it can offer valuable insights into a fund's ability to navigate different market cycles. Since its inception in 2015, TOTL has delivered generally positive returns, outperforming its benchmark, the Bloomberg U.S. Aggregate Bond Index, AGG, in several years. Notably, during periods of heightened market volatility, the fund has exhibited resilience, often delivering positive returns while the broader bond market suffered losses. However, it is crucial to acknowledge that TOTL's active management approach exposes it to potential underperformance if Gundlach's market calls miss the mark. As demonstrated in Q2 2023, the fund's return, -3.23%, roughly matched the AGG, -3.16%, highlighting the possibility of periods where active management may not generate a significant alpha. Weighing the scales, potential risks and rewards of TOTL. Before considering TOTL for your portfolio, it's vital to evaluate its inherent risks and potential rewards. Pros. 1. Active management offers the potential for excess returns compared to passively managed bond ETFs by capitalizing on market diversification across fixed income sectors, mitigates risk by not being overly reliant on any single asset class, providing stability during market downturns. 2. Dynamic duration management adjusts interest rate sensitivity to capitalize on anticipated changes in the yield curve, potentially protecting against rising interest rates. 3. Experienced fund manager. Jeffrey Gundlach's reputation and track record in fixed income investing inspire confidence in his tactical allocations. 4. Lower correlation to equities. Historically exhibited less volatility compared to the stock market, providing a valuable hedge for a diversified portfolio. 5. Liquidity and convenience. Shares trade like stocks on exchanges, offering easy entry and exit, unlike many traditional bond investments. Examining challenges and considerations. While TOTL offers attractive features, potential drawbacks deserve careful consideration. 1. Higher fees. Actively managed ETFs typically carry higher expense ratios compared to passive offerings, impacting long-term returns. 2. Concentration risk. The portfolio's dependence on Gundlach's judgment introduces keyman risk if he were to leave the fund, or his investment decisions falter. 3. Short track record. Compared to established bond funds, TOTL's relatively short history makes it difficult to definitively assess its long-term performance consistency. For unpredictable volatility, while potentially delivering higher returns, the active management approach can expose investors to periods of underperformance compared to the market. 5. Tax implications. Bond fund distributions can vary in tax treatment depending on the underlying holdings, requiring careful consideration for tax-sensitive investors. Tailoring TOTL to your investment strategy. Whether TOTL aligns with your investment goals depends on your risk tolerance, investment horizon, and overall portfolio composition. Here are some considerations. 1. Risk-averse investors may prefer the stability of passively managed bond ETFs due to TOTL's potential for volatility. Long-term investors can potentially benefit from TOTL's active management approach if held over a full market cycle. 2. Income-oriented investors, while not primarily aimed at high income generation, TOTL's diversified fixed income holdings offer consistent interest payments. 3. Portfolio diversification. TOTL can complement a stock-heavy portfolio by providing a hedge against market downturns and offering lower volatility. Ultimately, the decision to invest in TOTL requires careful analysis of your individual investment objectives and risk tolerance. Consulting a financial advisor can be highly beneficial to assess whether TOTL aligns with your unique financial goals and risk profile. Conclusion. The SPDR DoubleLine Total Return Tactical ETF, TOTL, presents a compelling proposition for investors who seek the potential for active outperformance in the fixed income market. Its dynamic allocation strategy, led by the experienced Jeffrey Gundlach, aims to capitalize on market inefficiencies while offering portfolio diversification and liquidity. However, it is crucial to acknowledge the inherent risks associated with active management, including higher fees, keyman risk, and potentially volatile performance. Careful evaluation of your individual needs and risk tolerance, alongside potentially seeking professional guidance, is essential before deciding if TOTL deserves a place in your investment portfolio.